Here is a detailed summary of Walmart's 2025 Q4 earnings call transcript, designed for clear and engaging delivery. Introduction: Smooth transition. Thank you for joining us for Walmart's fourth quarter fiscal year 2025 earnings call. We have CEO Doug McMillon and CFO John David Rainey with us today to discuss the company's performance. Following their remarks, we'll open the floor for your questions. CEO Doug McMillon's overview. Good morning, everyone. We finished fiscal year 2025 with another quarter of strong results, thanks to our dedicated associates serving our customers and members. For the fourth quarter, we saw sales growth of 5.2% and adjusted operating income increase by 9.4% in constant currency. We continue to gain market share globally, with both transaction counts and unit volumes increasing across our markets. We're pleased with our performance on three key fronts. First, a healthy top line, driven by our enhanced ability to serve customers how and when they want. Our focus on low prices and increasing convenience is resonating, leading customers to shop with us more often and purchase more items, even in general merchandise. Second, profit growth outpacing sales growth. We're seeing promising scaling in our higher-margin businesses like membership, marketplace, and advertising, allowing us to reinvest in our core offerings like prices and associate wages while improving our overall profit mix. Third, improved return on investment (ROI). Even as we invest significant capital to capture growth opportunities, our ROI has improved, reaching levels last seen in 2016. All three of our segments, Walmart US, Walmart International, and Sam's Club, had a strong year. We performed exceptionally well during the holiday season across key markets like the US, Mexico, Canada, and China. I'm also excited to share that our fintech business, PhonePe, is preparing for an IPO in India. We ended the year with inventory in good shape, up 2.8%. We remain committed to helping customers save money, as evidenced by over 22,000 rollbacks in Walmart US alone last year. Our expanded assortment, focus on delivery speed and accuracy, and initiatives like same-day pharmacy delivery are driving growth and customer satisfaction. Sam's Club also launched a new shipping offer, including free same or next-day delivery, further enhancing member value and leading to their top ranking in customer satisfaction among retailers. On the technology front, we're leveraging AI for greater efficiency. Our new AI agent for merchants, Wally, helps identify and resolve out-of-stock issues, and our coding assistance tools saved our tech team approximately 4 million developer hours last year. We're becoming more productive, freeing up time to focus on growth initiatives. We're also excited to be transitioning to our new home office buildings in Bentonville, a move that reinforces our core values of leadership, humility, and urgency, all while maintaining our everyday low-cost culture and our purpose of saving people money and helping them live better. CFO John David Rainey's Financial Deep Dive and 2026 Outlook. Thanks, Doug. I'm delighted to report that Walmart delivered another strong quarter, exceeding our sales, profit, and earnings expectations. This performance underscores the strength of our business model and the dedication of our associates. For the full fiscal year 2025, consolidated revenue grew 5.6% in constant currency, adding about $36 billion. Adjusted operating income increased nearly 10% in constant currency, and adjusted EPS was up 13%. Our newer digital businesses are significant growth drivers. Global advertising grew 27% to $4.4 billion. Walmart US Marketplace revenue grew 37%, and global membership income rose 21% to $3.8 billion. These streams are becoming key contributors to our operating income growth. Our investments are yielding results, with return on investment improving approximately 50 basis points to 15.5%. We also returned significant capital to shareholders, raising the dividend by 13%, our largest increase in over a decade. In the fourth quarter specifically, consolidated revenue increased over 5% in constant currency, with e-commerce growing a strong 16%. Walmart U.S. comparable sales grew 4.6%, including 20% e-commerce growth. Grocery remains a standout performer, and we're encouraged by the improvement in general merchandise with low single-digit comp sales growth for the second consecutive quarter. International sales grew 5.7% in constant currency, driven by China, Walmex, and Canada. From a profitability perspective, consolidated gross margin expanded 53 basis points. This was driven by strong inventory management, lower markdowns, and an improved business mix. Notably, global advertising increased 29%, and membership income was up 16% enterprise-wide. Marketplace revenue grew 34% in the U.S., with nearly 50% of orders fulfilled by Walmart Fulfillment Services, WFS, a record high. Looking ahead to fiscal year 2026, we expect consolidated net sales growth of approximately 3% to 4%. Operating income is projected to grow faster than sales, between 3.5% and 5.5%. Adjusted EPS is expected to be in the range of $2.50 to $2.60. We anticipate capital expenditures to remain robust, between 3% and 3.5% of sales, as we invest in technology, store remodels, and new openings. For the first quarter of fiscal year 2026, we project consolidated net sales growth of 3% to 4% in constant currency. Operating income is expected to grow 0.5% to 2% in constant currency. First quarter EPS is projected between 57 cents and 58 cents. While we acknowledge the dynamic economic backdrop, we are confident in our strategy and our ability to navigate challenges. Our business model is designed to deliver value to customers and sustainable growth for shareholders. We believe we are well positioned for the year ahead, with a focus on execution and seizing opportunities. Key financial metrics summary: Q4 FY25 revenue growth, 5.2%, constant currency. Q4 FY25 adjusted operating income growth, 9.4%, constant currency. Full year FY25 revenue growth, 5.6%, constant currency. Full year FY25 adjusted operating income growth, nearly 10%, constant currency. Full year FY25 adjusted EPS growth, 13%. Q4 FY25 consolidated gross margin expansion, 53 basis points. Q4 FY25 inventory growth, 2.8%. FY26 guidance consolidated net sales growth, 3% to 4%. FY26 guidance operating income growth, 3.5% to 5.5%. FY26 guidance adjusted EPS, $2.50. $2.60. Q1 FY26 guidance consolidated net sales growth, 3% to 4%, constant currency. Q1 FY26 guidance operating income growth, 0.5% to 2%, constant currency. Q1 FY26 guidance EPS, 57 to 58 cents. Management's forecasts for future quarters, FY26. Consolidated net sales growth of 3% to 4%. Operating income growth of 3.5% to 5.5%. Adjusted EPS of $2.50 to $2.60. Q1 FY26. Consolidated net sales growth of 3% to 4%, constant currency. Operating income growth of 0.5% to 2%, constant currency. EPS of 57 cents to 58 cents. Management expects net sales and operating income growth to be relatively consistent across quarters in FY26, after adjusting for calendar impacts. They also anticipate first-half sales and operating income to grow within the range of their full-year guidance. Significant risk factors, macroeconomic conditions, uncertainties related to consumer behavior, global economic conditions, and geopolitical events. Currency volatility, significant impact on reported sales and EPS, with expected headwinds in FY26 and Q1 FY26. Tariffs. While managed for years, future tariff impacts are a potential concern. Consumer spending shifts. The ongoing shift from general merchandise to grocery and health and wellness can create margin pressure. Integration risks. For acquisitions like Vizio, integration challenges and transition costs could impact profitability. Competitive landscape. Ongoing competition requires continuous investment in price and customer experience. Highlights: strong top-line growth, consistent sales growth driven by value and convenience. Faster profit growth, operating income growing faster than sales, fueled by higher-margin businesses. Improving e-commerce economics, significant improvement in incremental margins and reduced e-commerce losses. Robust digital business growth, strong performance in advertising, marketplace, and membership programs. Increased market share, gaining share across various countries and income levels. Enhanced customer convenience, expansion of same-day delivery and expedited shipping options. Positive customer satisfaction. Sam's Club ranked 1 in customer satisfaction. Inventory management. Inventory levels in good shape. Dividend increase. 13% dividend raise, largest in over a decade. Technological advancements. Leveraging AI for efficiency and productivity. PhonePe IPO preparations. Significant step for their Indian fintech business. Lowlights. SG&A deleveraging. SG&A expenses deleveraged 46 basis points in Q4, driven by tech investments, variable pay, marketing, and utilities. Merchandise mix pressure. Shift towards lower-margin grocery and health and wellness categories away from general merchandise can pressure margins. Integration costs. Transaction-related expenses for Vizio acquisition impacted the quarter's results. Wage investments. While beneficial long-term, initial wage investments at Sam's Club will pressure profits for a couple of quarters. Most important statements from CEO and CFO Doug McMillon, CO. Customers and members are going to be looking for value. They're going to be looking for convenience. The changes that we're making in the company continue to have us appealing to them in those respects in an even better way. So our confidence level is high. He also emphasized, "We know who we are, and we like where we're going. We feel like we're just getting started." John David Rainey, CFO. Our business model is delivering as it's designed to do. This is the second consecutive year that we've grown sales more than 5% and operating income meaningfully faster. Regarding the future, he stated, "We're incredibly excited about our business. It's not to say that there aren't challenges ahead, but our strategy is the right one. This team is executing on it." He also highlighted the improving profitability of newer businesses. The incremental margins in our e-commerce business globally for us in the quarter were 11%, over twice the rate of what our overall margin is. In closing, Walmart delivered a strong fourth quarter and a solid fiscal year 2025, demonstrating resilience and strategic execution. The company remains focused on its core mission of providing value and convenience to customers while driving profitable growth through innovation and operational efficiency. We look forward to the year ahead with confidence.